It's worth spending a moment on the global growth outlook. And so we believe developed nations are most likely to succumb to outright recession. The US probably suffers a little less than most, just in the sense that it's a less interest rate sensitive economy right now. Canada shrinks a bit more than the US. It is more rate sensitive, in particular due to its exposure to an overheated housing market. And then Europe and the UK likely fare a little bit worse again. And that's because of their exposure to Russian sanctions and, in particular, high natural gas prices, with perhaps a pinch of Brexit and political chaos in the case of the UK. And so, not all recessions exactly alike. Emerging market growth should also be significantly affected in similar ways in terms of slower growth in 2023. In fact, globally, we're looking for only around 2% GDP growth for the year ahead. And that's right around actually the theoretical threshold for recession or not on the global level. Global economy rarely shrinks. 2% is considered a pretty bad number. China is worth singling out, though, just because it is marching to its own drummer to some extent on multiple fronts. So it suffers from some unique challenges that other countries do not, in part, though, because it actually could grow a little bit faster in 2023 than 2022. And so I guess the main story is one in which China's zero tolerance policy has devastated the economy's growth. We can even see that hitting right now, given a recent wave in China. But protests have mounted in a big way, and China is now seriously revisiting some of those COVID rules, though not abandoning them altogether. This should allow the economy to move a little bit more freely, though they are balancing that versus the risk of the virus growing out of control. Growth, we think, right now is running around 3% for China, and so that is significantly less than normal. The Chinese economy is also facing housing market challenges and a government that's shifting control from the private sector back to the state, which probably isn't growth maximizing. But as we look out over the coming year, likely fewer COVID restrictions, likely some resolution of the most severe headwinds for the housing market as housing policies start to ease as well. Wouldn't want to overstate how quickly China can run because it has growing debt, it has poor demographics, it isn't emphasizing the private sector to the extent that would be optimal. And so we think the Chinese economy picks up next year, but likely no more than about 4% growth. And for context, historically, China would grow at 6% plus before the pandemic. They're likely now in a 3 to 4% world.